Welcome back to Branching Out, where real estate meets real life. And we are here today with Jessica Tucker. She is our go-to insurance agent in town, part of the Bird Agency. So thank you for being here today.
Absolutely. Thanks for inviting me.
Of
I
course.
appreciate it.
Of course. So today, I think the listeners would really like to hear about insurance for real estate investors.
That makes sense.
We're going to hit on that. But before that, let's talk a little bit about you and your background, how you got into insurance. I think you're also an investor yourself.
I am.
Fantastic. Yep. So let's dig into that a little bit.
Oh gosh. Okay. So about me. Well, I got into insurance in 2007, and I started with another company than what I'm at now. My granddad had a business since 1963. And he was trucking along. He was actually the biggest nationwide agent on the Eastern Coast.
Oh, wow.
In the 70s and 80s. So that was pretty cool.
Yeah.
So at one point, he was getting older and decided to retire. So I had already been in the business for 2 years, like I said, with another company. My brother had worked for him for about 10 years. And so we were able to take it over together. It was kind of perfect timing.
Yeah.
At any rate, we have just... I guess, stayed on Church Street for almost 50 years, and then we moved. We moved to Davidson Drive, which is right near Applebee's and Mr. C's.
Right off Church Street, though.
Right off Church Street, but it was almost a little sad to leave where my granddad had been for so long. Mm-hmm. But we did move in 2019, so we're at a new location, and we're really excited about that. But that's really, we've just been trucking along. We write personal insurance, commercial insurance, life insurance. We do everything but health insurance. And Nationwide has helped us along the way, and that was always our number one partner. But after about 2012, they started kind of letting us be a little bit more free in our concepts and where we're writing business. So it started where we could write outside of Nationwide if they were ineligible for coverage with Nationwide. Mm-hmm. And then we moved to, you can actually broker for price now, meaning that if I could get you a better deal with Progressive, I have the freedom to do that. And in 2020, they let us completely loose, and now we're independent, and so I can have contracts with any carrier I want.
Fantastic.
Which lets me give a home to basically anybody that walks in my door.
That's great.
Yeah.
Okay, so let's talk about the real estate investing side. So when did you buy your first property? Tell us how you got into that.
We fell into that.
Okay.
So we got married, my husband and I got married in 2008, and we were living in a townhouse in Cornelius. And then in 2011, we decided that we wanted a home. And so we bought our house, and I said, let's keep our townhouse. I really didn't want to let it go for emotional reasons because that was the first house we came home to. And so just for that, we kept it. And we found a renter in the next couple months, and it was perfect. And we have been renting ever since on our personal side. And we don't plan to let that townhouse go ever. We'll probably end up retiring there at some point in time. Yeah, it sits right on the lake, so it's perfect.
Oh, that's awesome. So you must have had a good first tenant after you moved out.
No.
Oh, you didn't? Okay.
No.
So what were your emotions when that happened? Like how annoyed were you? Like,
she wasn't bad as far as she kept up the property.
Yeah.
It wasn't a problem there. She just had some other personal issues, and she ended up having to move. She had family issues and had to move. And so we had another renter that was right after her, and that is when our flood happened, which was very fun. And then
good thing you're an insurance agent.
Yeah, I had some good coverage.
So actually, let's talk about that, because I was going to ask you what your craziest insurance story is, but I've heard a little bit about this story. Yeah. So let's talk about that.
It was awful. I was 9 months pregnant with our only daughter, and it was a week before I gave birth. It was on a Sunday morning, and we still had some friends in the neighborhood. Of course, because we'd lived there a couple years ourselves, and our friends called us at 6:30 in the morning, and they said, you have water running out your doors and your windows. And, you're just waking up, so you're thinking, what? You can't be telling the truth. You had to have seen something.
Yeah.
And we hop in the car and speed over there. Our renters had taken the weekend at the beach or somewhere. They weren't there to turn the water off. But what happened was our water heater busted. And for whatever reason, the builder had decided to put the water heater in the attic. And so the water flowed down the walls of the second story and into the floor. And so the ceiling of the first story, when we walked in, was in the floor. And it was floating. About that much of water was in the townhouse, and it was literally floating. And so, yeah, that was horrible. It took 3 months to rebuild it. So we'll talk about the importance of your renters having renter's insurance, and that will pay for them to live somewhere else if there's a covered claim.
Okay.
So their insurance took over for them. They got to move out, which they were not happy about. But they did. They moved out, and their insurance paid, and my insurance paid to build back the structure.
How much was that build back?
$30,000.
How much did you have to pay?
So I paid our deductible. This is how insurance works. You pay your deductible. A lot of people think it's like health insurance deductibles, where you can, over time, just pay a little bit towards it, and then you meet it at the middle of the year maybe. But insurance is just per claim. So it's when you have $1,000 deductible, that is what you pay.
Okay.
Now, the item that causes the destruction, so the water heater, is not covered.
Okay.
So you also have to pay for the water heater. So just FYI on that.
Okay.
Mm-hmm.
So the $30,000 was just for the rebuild.
Yes.
And you had to pay extra
For the water heater.
Okay.
Yeah. Yeah,
No
which
plumber
I think
today
at
helped
that
you with
time,
that.
well, that was before I knew Greg. That was back in 2012. So no, but we did have to replace it, and we did not put it back in the attic. I would recommend, if you ever have that situation, that you put it in the garage, and that way it won't flow into the home.
Yes, that would be terrible. Okay.
Yeah.
All right. So you brought up a good point about things that are covered and not covered. So we'll get into that. But so most of our listeners are real estate investors.
Sure.
They invest differently. Some have long-term rentals, some have Airbnbs, some do new construction.
Oh, and by the way, so for the rental insurance on my side, my insurance paid for my lost income. So I think that's really important for the listeners today to know, because once your tenant moves out, you're not getting that rental income anymore, and your insurance can help pay for that. But I'm sorry to...
No, you're good. Okay, that is good to know. Okay, so let's kind of talk a little bit high level about the differences between the insurance that you would get for a long-term rental versus a short-term rental versus new construction versus like if you're doing a flip. Okay. Or if your house is vacant versus occupied.
Yeah.
No, that was a lot of questions
that's
all at once.
That's a lot of things.
Yes.
Well, let's see. Let's talk about short-term rentals first. Okay. So the short-term rental property policy versus a long-term rental property policy, there's no differences in coverage. The difference is the company that will write it. So some companies will not take short-term rentals, and actually most will not take short-term rentals. And I'm saying short-term rentals if you're doing like an Airbnb where you're renting nightly or weekly or something like that versus a year lease. That's kind of what we think of as a short-term rental. Okay. But it's really just the company that it boils down to.
Got it.
So you're still going to have your structure coverage. It's still going to cover things like hail damage and fire and water damage and everything like that. You're still going to have your $1,000 deductible or $2,500, whatever you're comfortable with, and whatever if the price is right. Because of course, the higher deductible, the lower the premium. But it's going to be the same type of coverage that you would have versus the long-term tenant.
Okay.
The income, what you want to see in your loss of income coverage is just making sure that amount is equal to your annualized rent. So that's really important to have, because you certainly don't want to short yourself in the time where you have a claim and your tenant moves out.
Yes, for sure.
Yeah.
Okay. So what kind of things are not typically covered in insurance policies? Typically.
I get questions all the time about flood.
Okay.
So flood is just your outside waters coming into the home. People talk about, my house, like I can say my townhome got flooded. Well, I'm using kind of a really hairy term there, because flood and insurance is not that a pipe broke or your water heater busted and flooded your house. This is an actual flood like we had with Helene.
Yes.
That would come into the home and wash it away or cause damage. So flood is not covered. That's huge. Okay. You can buy an extra policy for that. And depending on your flood zone, that will depend on the price. So I've seen flood coverages go from $600 all the way up to however much that you want to spend, a couple thousand.
Okay.
Yeah. Earthquake is not covered either. So if you have like A lot of people, unfortunately, will have problems with their foundation and like settling or something like that, which is expensive to fix if there's issues, and that's not covered either. People want to cover their driveways for cracking and settling, and that's not covered. Number one, structure. It would need to be a structure on your premises for it to be covered. And number two, earthquake or earth movement is not covered.
Okay, so earth movement and flood.
Yeah, those are the two main things. Ones. Yeah.
Okay. Yeah. So, well, what about your water heater when that wasn't covered in your apartment situation? Why wasn't that covered?
So it's just whatever caused the loss.
Yeah.
So it could have been a pipe.
Okay.
Or I'm just trying to think of anything else that it could have been. Maybe your microwave caused a fire in your kitchen or whatnot. So the thing that caused the loss is not covered, but the loss that it has caused is.
Okay. That makes sense. So what if you just put your house on the market to rent? You're looking for a tenant and the house is vacant. Is there a different insurance or between situation. Or when you're flipping and you're working and you're doing the construction on it? How does that work?
So in insurance, and it depends on the policy, but most of the time there's a 60-day vacancy clause. Okay. And that kind of gives you a little bit of time in between renters if you just have a regular landlord policy. So that's not a problem. But once it goes past that 60 days, a claim can be denied. So you do not want, if there's a fire that has broken out because nobody's living there, nobody is there to say, oh, there's a fire, let me call 911. Yeah. Or like my tenant, they weren't there at the moment, it's not vacant, but they weren't there to turn that water off. So same thing with the vacant policy. Nobody's there. Yeah. So that's the problem that insurance companies have with vacancy. But if it goes over that 60 days, you want a vacant policy. Vacant policies are expensive. So most of the time I tell my customers just to pay monthly instead of paying on an annual basis or something like that, because hopefully they'll get a tenant in there or they will sell it within a couple months or maybe within 6 months. So that way we can kind of control cost a little bit too for them.
For sure. Okay. What if you are developing a property? What kind of policy is that?
So it depends on what you're doing. Okay. If you've bought a home that just needs some minor cosmetic work, like you're going to put down some new flooring and some new cabinets and call it a day, whether you're going to sell it or rent it. We could write just a regular rental property policy if you're going to rent it, or if you're selling it, we'd just write that vacant home and put in, hey, we're doing a little bit of updating. Okay. But if it's anything more than that,
I was going to say ground up construction. If you have some land and McAllister's coming to develop for you.
Yes.
What?
So with that, you would need a builder's risk policy. Okay. So a builder's risk is for ground up construction, or if you've bought an existing structure and it needs a major overhaul, like a new roof, new HVAC, we're taking it down to the studs. You want a builder's risk. Most policies are not going to cover in the course of construction like that. So you want to make sure that you have that builder's risk policy in place. Okay. Most of the time, builder's risk policies don't have liability built in. Okay. Which is huge, because if something happens on those premises, somebody gets hurt or whatnot, then you can be on the hook and you don't want to go without that extra liability. So just make sure it's either within your builder's risk or you have a separate one to go with it.
Okay, cool. Is liability in most of the policies, like the landlord policy, policies that you were describing, or is that something separate you have to get?
That's a good question. Yeah. So, and a lot of people don't even know that they need liability.
Exactly.
So, it is very, very scary. I actually just talked to someone this morning, and he has 8 rental homes in Iredell County, and he has them all with what's called the NCJUA, which is the state. Okay. And that's kind of the last resort where I would put anyone. So I was asking him questions why are you there? I said, I'm not trying to be nosy, but I need to know the updates on the homes, or are they not in good condition? What is happening with you? And I said, also, those policies don't have liability built in. So you have to have a separate one. And he didn't know that. So I was like, you need to buy one today, right now.
and then what would that be saving them from? If someone got injured on the premises?
Yeah, bodily injury or property damage. Okay. So anything that would happen that they would sue his LLC for. Got it. Those properties can be pulled into it because they're owned by the LLC. And he's paid all of his properties off. He has a lot of money invested in these homes, and it could just be gone from a lawsuit.
Yeah. So that brings up another good question. So if you have 8 to 10 properties or more, Is there like a and we'll get into umbrella policies because I know that's a question that a lot of people ask me. But is there a way to like bundle all your properties under one, just help with cash flow and scaling efficiency?
Sure.
Like, how does that work?
Yeah, I mean, it depends all on the company and how they structure residential rental properties or commercial rental properties. So if you're going on the residential route, a lot of my commercial carriers will not even cover or will not even offer a quote anymore on residential properties.
Okay.
So on the personal side of things, you can still have many of those residential properties, and many companies will put them on one bill, and then that way you're not getting 14 bills per se in a month if you're going to pay monthly, but they can be put on the same bill. So it's not necessarily for scaling as it is what companies will take you and when.
Got it.
And how.
So you're not getting 14 bills, but are you getting in that one bill the same cost that it would be for those 14 bills? Or do you get like the more properties you have, is there like a discount to it?
There's a discount.
Okay.
Yeah. So many personal policies will offer some type of multi-policy discount.
Okay.
It just, again, depends on the carrier if they will do that or not. And sometimes people get hung up on like discounts too. Like they might say, oh, well, I get a discount over here and my rate is $10,000, for my 8 rental properties, let's say. Well, you might have another company that doesn't necessarily offer multi-line discounts, but your total rate's $8,000. You see what I'm saying?
Yeah.
So their rate might be lower, even though they don't offer like just this discount that shows up on your policy. That makes sense.
Yeah, that makes sense. Okay, so let's circle back to what is an umbrella policy?
Umbrella policies are my favorite policies out there.
Okay, what do they do? What are they? How can investors use them?
You literally can think of it like an umbrella when you're standing in the rain. So everything underneath it is protected.
Okay.
So let's just talk about on the personal side of things. You have an auto, you have a home, and then let's say you have one rental property like I do. So you can bundle all of those together and then put them under your umbrella. Each policy has its own liability limit. We call it a base liability limit.
Okay.
And let's say you carry $300,000 on your base liability in each policy. That umbrella will sit on top of that base. And so let's just say you choose a $1 million umbrella at this point. So you're actually covered in a claim for $1.3 million in a liability. So it just adds together. So very good idea, because when I tell my clients is it protects your assets. So in the event that I get into a bad auto accident and someone gets really hurt and I have to pay for their medical bills, then my insurance, once my auto insurance is exhausted at $300,000, my umbrella will pick up and pay for an extra $1 million. And what that means is the person that's hurt, or maybe their family, if all of their bills are taken care of by that $1.3 million, then they don't sue me personally. If you don't have the umbrella, let's just say you just carry the $300,000 on the auto in the same accident, then they can sue you anything over the $300,000. So your assets come into play at this point, not to get into like legally what assets can be taken in and what can't be, like retirement accounts or, other properties or things like that. But what I tell people is you just want to know your net worth and then protect that amount. And I never ask them for their net worth, but I say, have that in mind. So let's just say your net worth is $4.8 million. I always recommend a $5 million umbrella.
Yeah, makes sense.
Yeah.
Okay, cool. Okay, so I feel like recently everyone's insurance rates are going up.
Oh,
so
yes,
let's talk about rate increases, because I know everybody out there, their insurance has gone up. Whether
Do
it's
not
auto,
hate your
whatever.
insurance agent, hate the game.
So yes,
okay?
let's talk about that. It's not your fault.
So Number
tell us how
one.
that works.
There are so many things that go into why insurance rates go up, but I can name a couple. So with insurance, if you think about, let's just go with home insurance for an example. Let's say a home burns down. All these things that go into rebuilding the home, whether it's labor cost or it's material cost, and everybody just kind of stops there. They think, oh, well, that's what home insurance is. No. It does those two things, but it also goes into like, well, what were your contents? You have all of these things, your tables, your chairs, your rugs, all these consumer products that we've seen increase in price over the past 5 years. We've seen building cost increase in price. I think it's, what was it? Not drywall, but plywood. It went up like 300%. Just plywood.
Yeah.
The labor has gone up as well, the labor cost. But home insurance doesn't stop there. It also goes into your loss of use. So if your home burns down right now, they have to pay for you to live somewhere else.
Yep.
They've got to pay for your food if you don't have a kitchen in your rented hotel room. All of these different things for you. So it's not it doesn't just stop at rebuilding that structure. So everything has gone up. And my point here is that the insurance industry is, I think they are, they have to take into account all of the increases in all kinds of industries. They're hurt by all of these because what they have to pay out has now increased because all these other industries have increased.
And this is nationwide too. So is that right? So if something like Helene, like that caused everyone's insurance to go up, and like the fires in California, like things like that, natural disasters, does that take into effect?
Yeah, I mean, to oversimplify, not getting into the weeds of insurance, but how I explain it to people is it's a bucket of coverage. That's how insurance started out. Everybody puts into the bucket, and then when you have a disaster, you can take out of the bucket, right? So that's literally how insurance works.
Okay.
Insurance companies will invest the money that's coming in and make a profit. They don't work for free, but at the same time, they have to keep up with what's going out in these huge storms. So that was my second thing, is we've had these huge storms come in, and it's not that we've always had storms, but they're much more frequent now, and they're getting to be worse as far as the severity of the storms. So they have more of a widespread damage. I mean, it's nothing for just billions of dollars in one storm to be paid out in claims from one company.
Wow.
Not in the USA, not anything. It's just one area, one storm, one company. That is why all of our insurance is going up, mainly.
Yeah.
Now, on the flip side, I have seen fraud as well.
I was going to bring that up, especially like for roofs.
Yeah.
I got caught in a scandal and I realized it was wrong, but those door-to-door roofers, they knock on your door and they're like, oh, well, we just fixed your neighbor's roof. They had hail damage. You may have hail damage too. And then they go up there and they say, oh, you have damage. We'll put the claim in for you.
Yes.
And then it's like,
that's the bane of my existence.
Oh my gosh, I bet.
And trying to explain it to a customer, because I want everything for my customer. If they have damage, I want them to be covered. But at the same time, if they have a roofer that comes out and my customer may not have a lot of damage, and the roofer says, you need a whole new roof, and they say, we're going to handle the claim for you, we're going to turn it in, it hurts my customer's policy, number one, to even try to have a claim. But when they don't have a lot of damage, and let's just say one of my companies pays out to just fix, the portion that's damaged, not giving a whole roof, the customer thinks the insurance company is being dishonest, not the roofer. And so what I do in that situation is I've got a roofer that I work with personally, and he's a great guy. And I will tell my customers, you don't have to use him at all, but he can come out and he will tell you if you have damage or not, no matter what. And so I actually just had him, I talked to him this morning. Funny you bring it up. But he said that he went out to a customer's house yesterday or this morning. I can't remember when he went out. But my customer has been in a 2-year just problem with his insurance company. He didn't tell me. He didn't call me. I'm just finding this out like last week.
Because you're not his agent?
No, I am his agent. He didn't call me.
Oh my gosh.
He didn't call me.
Wow.
And to tell me he's having trouble.
Yeah.
And so we talked, and I was like, please don't ever do this again. Like, please call. I don't know if you don't tell me.
Yeah.
And anyway, so my roofer went out, and lo and behold, he does not have a need for a full roof replacement. It was just what his company paid 2 years ago. They paid within a month of the claim. And it could have been done, but this one roofer he was working with was like, no, we're getting it. So I'm sorry you had to go through that too.
No, it's okay. I should have, there was plenty of red flags. I should have known. But so we're talking about roofs. So the roofs
let
and
me
HVACs.
tell you too, while I'm just thinking about it, I'm sorry.
No, you're good.
So with hail damage, and what I try to explain to everyone is hail doesn't come down in a blanket. It doesn't come down, like if me and you lived right beside each other, your house could be more damaged than mine.
Mm-hmm.
But people think that just because we live in the same neighborhood, that you got a new roof and I didn't, there's a problem. But it's based off the damage that you have.
Yeah.
So I would suggest always having 2 or 3 roofers come out unaffiliated to each other and giving you an estimate and making sure that you actually have damage.
Yeah, that's a good recommendation. So as far as ages for roofs and HVACs, major systems, when people are looking for houses, investment properties, or buyers.
Yes.
So how does the coverage work? Is there a certain amount of time, like an H-frame, where insurance carriers don't or providers don't cover? Like,
so
how does that
after
work?
2020, insurance companies have really, really dove into their underwriting guidelines, and they do not like old roofs. They just do not like them. Of course, we know why, because we can have interior water damage or whatnot that they're going to have to be on the hook to pay for if they say, yes, we're going to write this policy for you. So many companies have different parameters. I've got one company that will only write a home if the roof is less than 7 years old.
Oh, gosh.
I have another one that will only write a home policy if it's less than 10 years, if the roof is less than 10 years old.
Okay.
I've got a company that doesn't have any type of roof rule at all.
Oh, that's nice.
Yeah. But that's only one of 50 that we have.
And I bet, is it expensive?
No.
Oh, okay.
No. It's just if you fit.
Okay.
There's other parameters with this company that they'll look at. But if you fit, then you can get in.
Okay.
But you really want to stick with less than 20 years if you can, you know.
I mean, that's about right. You probably need a new roof after 20 years.
You do.
Anyway, what about HVACs?
HVACs have really not come into play as far as like, you know, the roof rules that we've had. We don't have HVAC rules. As long as they're in working condition and they've been inspected by someone. Now, you can get discounts. If you do, you know, let's say replace the HVAC or whatnot, there's some companies that will give discounts for that kind of thing. But it's not like you're not going to, you know, make or break this policy with an HVAC discount.
Yeah.
It might be $20, you know, or something like that. But
so that's a good point. Okay, so discounts. So are there certain things, like if you have a long-term rental, that you can get discounts on your landlord policy? Like if you have an alarm system, or if you have sprinklers, or if you have a fence, or you're working with a property manager.
Yeah.
Are there discounts that you get in those policies, whether it's the short-term or the long-term? Yeah. Out there?
You basically named them. So there's a multi-policy discount in some carriers. Yeah. Again, this is going to be carrier to carrier specific. There's a multi-policy discount in some. The roof, if it's been updated in the past couple years, that like maybe 5 years or so, that could be a discount. A burglar alarm is always going to be a great discount for you. Sprinklers definitely will be nice. I don't know if I've written any just like residential property that's ever had a sprinkler before. Now that I think of it, but yes, I would have it as a discount. Okay. Even like local alarms, you know, if you just have an alarm like that doesn't necessarily call the police, but it just goes off on site. Yeah. You can have a local alarm discount. None of these that I mentioned are going to significantly reduce your rate, but it always helps, you know.
And then what about like claims? Because a lot of investors are kind of worried about putting in insurance claims. So like, oh, my rate's going to go up. Okay, so be scared.
Be scared.
With claims. Like one claim or like
if you're brand new to the company, I know.
How many is it?
Well, okay, so they really look for frequency and the type of claim.
Okay.
One claim I don't feel like necessarily can hurt you. Again, it's going to be carrier specific and also you specific. So like if you just moved companies, let's just say, and you're now in your new insurance company doing great, but in that first year, you've got water damage, like me, you know, the insurance company could actually drop you because of just that one claim because you're a brand new client, you know. So now some companies won't do that to you. It's just, like I said, company specific on all of them. But I would say, you know, they do look at frequency. So any company is not going to like, and actually I just had this happen with one lady on her auto insurance, but she hit 3 deer back to back.
Oh my God.
Within the past 6 months. Within the past 6 months.
Whoa.
And they've paid out, I think it was like $32,000 total in 6 months for her. She said,
did she get a new car?
Deer. No, it's over 3 claims.
Oh my gosh.
So they said, no more comp and collision for you. So kind of the same thing with any type, your home or any rental property or whatnot. If you have the same claim happening over and over again, like for instance, like you have a pipe bursting. I had one guy where he had a couple theft claims back to back. They do not like that. If you have liability claims, so it's just kind of the same type of claim and the frequency of them. I would say more than 3, then you're really not good.
Yeah.
More than 2, they may cancel you, but 3, you're definitely out the door.
Okay. So only put in a claim if you're in like a crazy emergency. If you can afford it, don't put a claim in.
Well, and not to sound terrible.
Yeah.
But when you buy a home or you buy a rental property, you're saying that I'm responsible enough to own this property and I know that I have to upkeep this property. So insurance is not a maintenance plan. It's for a catastrophe.
Yeah.
So if you have like major fire damage, you have smoke damage, you have hail damage, I mean, all these things, yes, that's what the policy is there for, and that's what it's intended for. But another reason why our rates have gone up is because so many people use it as a maintenance plan to get a new roof, because roofs are very expensive.
Yeah, it makes sense.
Yeah. So you just kind of have to like be a responsible property owner and know that you are in for the long haul in this house and that you're responsible to upkeep this house. And then if a catastrophe happens, absolutely use your insurance.
Yeah.
But don't just turn in a $1,000 theft claim.
Yeah. This is the importance of having reserves.
Correct.
If you're investing in real estate, you should have some money saved up so you can pay for things that come up. Totally get that. So what else haven't we talked about that real estate investors should probably know? Is there...
Well, we didn't talk about contractors.
Okay, let's talk about that.
Yeah. So like if you have people working on your home, you always want to get a COI. It's called a certificate of insurance from them. And you will want to see a contractor have general liability and workers' comp coverage if they're coming on your premises. Let's say they have an employee that gets hurt.
Even if it's your primary residence?
Even if it's your primary.
So any workers, you want them to have all that insurance?
All the things.
Okay. If not, then...
they can come back on you.
Okay.
Yeah. If their worker gets hurt and they don't carry workers' comp insurance, they can sue your liability on your property insurance.
Oh, fantastic. Okay.
Super great.
That's awesome.
Yeah. So always, always, always get a COI. Certificate of insurance, and that you do want to be listed as an additional insured on any COI that you get. So if you have someone coming in to do your floors, you get their COI with their workers' comp, their general liability, and you listed on the bottom as an additional insured.
Okay.
And that just means that you're covered under their policy too. So if something happens crazy, their policy can pay first, not yours.
Okay. So that leads me to my next question. So how do you know if you're like over-insured? Because my husband always jokes with me. He's like, if they had big toe insurance, you would have it. And I'm like, okay, yeah, maybe, but who knows?
Oh, that is a hard question that spans a lot of different types of policies, but specifically like landlord coverage. In this market right now, because the cost to construct homes has increased greatly over the past couple years. I don't even know if anybody is overinsured at this point. If you haven't just bought a policy and your insurance agent hasn't done a reconstruction cost coverage, like an analysis for you recently, you're probably underinsured on the building value. Before 2020, I could write a home policy and you could say, oh yes, Jessica, I have 1,000 square foot house. And I would say, well, you need $100 a square foot. You need 100,000 in coverage. Now that number has gone to 200,000 or more. So for that same 1,000 square foot house now, you need to be covered for at least 200, if not like 225. So I could say that probably no one is overinsured at this point on their buildings.
Yeah.
Now you can have different types of policies, of course. Any of the policies you can get as a landlord, I can't think of anything that you're going to be necessarily overinsured. I'm kind of going down like the life and health side of things because there's all kinds of policies out there that you can buy that
so many
just waste your money.
So many.
But as long as you have your landlord policy with your building covered and then your liability covered, you have an umbrella policy, which is not going to be overinsuring yourself. As long as you have those couple things, you're going to be okay.
Yeah.
It's just the fact of, is your building actually overinsured or not? So just make sure your replacement value is right.
And then, okay, so if you have a rental property and maybe you were living in the property, so you had a homeowner's insurance on the property.
Yeah.
What is the benefit of switching to a landlord policy, or can you just keep the homeowner's policy on there? I know a landlord policy
really good
is typically
question.
cheaper.
Sometimes.
Okay.
Sometimes.
Okay.
But that's a really good question. So, if you want your claim to be covered, you're going to switch it to a landlord policy.
Okay.
That's
Got
just
it.
bottom line.
You're not living there.
Yes.
And it's not vacant.
With ownership and occupancy is a big deal in insurance. And so if you are occupying your home, you have a homeowner's policy. You're great.
Okay. Got it.
Once you move out, the day you move out and you decide this is going to be a rental property policy or a rental property, you need a landlord policy.
The day you
right
move out.
then. Yes, because you're not living there anymore.
Got it.
Yep. So if you think you're going to have a renter in there within 60 days, you can get the regular landlord policy. If you have no idea what you're doing with the house yet, you probably need to do some work, whatnot, buy a vacant policy until you figure that out.
Okay. And then on top of the landlord policy, when you get a tenant, they need to have their own renter's policy.
Yes.
Okay. And then that covers their contents.
So it covers their contents. It also covers their loss of use. So if the home burns down, let's say, then their insurance can pay for them to live somewhere else.
Okay.
It also covers them for liability. So let's just say somebody comes over and gets hurt on the property and they sue your tenant. Their liability can pay out. You need to be listed as an additional insured on their tenant policy. So that protects you and your policy. Their policy pays first.
Yeah.
Then, if needed, your policy can come in if you're sued as well because of that same accident.
Okay.
So, yeah.
So
tenant policy is very important to have for tenants and for the landlord.
Okay. And then being an additional insured. Okay.
Yeah.
Awesome. Gosh, we covered a lot. I feel like I have so many more questions.
I know. I just feel like I threw information at you, and it is a lot.
And as you guys are listening, if you have any other questions for Jessica, put them in the comments, and we will get them to her, and she can answer them for you. All right. So what book are you reading right now? I always love knowing what people are reading.
Yeah, I'm reading a fairly depressing book. It's called The Radium Girls.
Okay.
And I picked it up in the cutest bookstore in Belmont. It is adorable. They sell Prosecco there, and you read books. But so at any rate, The Radium Girls is about, there was a group of women in the 1920s in Pennsylvania and New Jersey, and they were hired to paint watch dials.
Okay.
And this paint would glow in the dark. And they thought that's the whole rage. It was awesome. And they were painting themselves in it. They were painting their eyelashes. They were painting their clothes to go. They would wear their going out dresses to work so they could paint their dresses in it. Well, this was radioactive. Nobody told them that. It was great. And so when painting, these girls were given like a little cup of water. So they would dip their paintbrush in it, dip it in the radium, dip it in their mouths.
Why are they putting it in their mouth?
They need it pointed. So these watch dials are very small.
Yeah.
So you had to be very, very careful.
Yeah.
So they would point, it was called lip pointing. They would point these brushes and then paint. And time and time again. So I can't remember how many they do a day, but it was like, I think around 40, 50, 60
oh my God.
painting. It was awful.
Wow.
So, of course, these girls started getting sick.
Yeah.
And unfortunately, radium doesn't show up in your system. It doesn't start showing effects until years later. But once it started taking effect, it was bad. I don't know if I should even share what it did to them, but it was really, really, really bad.
Deteriorating.
Yeah.
Basically. Oh my gosh.
Yeah, alive.
Wow.
I mean, just awful.
Wow.
So I'm only in the middle of the book. I don't know how it ends, but we'll see. It's very, very riveting.
Wow. Yeah.
Yeah.
Good light summer reading for you.
I was going to say a nice light read.
Well, awesome. Well, tell us how we can find you. Tell us your,
oh man.
Yeah,
well,
your firm,
I
your
am
contacts.
here every day. So, but my firm is called the Bird Agency. We are now on Davidson Drive. We're on Church Street forever. And we have a website, birdagencyinc.com. You can find me on Facebook, searching the same thing, or Instagram. And then you can just walk in my office if you want to. So,
awesome.
yeah.
Awesome. Well, thank you, Jessica, for being here. Really appreciate all the knowledge that you have brought to our listeners, and we will see you guys next time.
Bye.